We've seen these underdogs turn into the heroes of the economy. And the Economic Times Startup Awards has been right here cheering them on. We've got the success stories to prove it. Just look at Nykaa, BrowserStack, Zomato, all past winners who've not just made headlines, but rewritten the playbook on building global companies from India. That's exactly the kind of talent we're going to be honoring here tonight. Those poised to take the world by storm. As our jury chair, Nandan Nilekani, reminded us during the jury discussions, the startup world is truly coming of age. And with that maturity comes incredible stories of resilience, creativity, and of course, a few pivoting moments. Because what's a startup journey without a good pivot? Tonight, we're celebrating those who have not only built sustainable businesses, but also found the winning formula for profitability in challenging markets. So let's kick off the night with excitement, a dash of humor, and a nod to what has been an incredible 10-year journey for the Economic Times Startup Awards. Before we dive in, let's take a moment to acknowledge the support that makes tonight possible. Our presenting sponsor, IDFC First Bank, for being a pillar in recognizing and rewarding innovation. Our workspace partner, IndyCube, for helping startups find the perfect spaces to dream big and execute even bigger. A nod to our knowledge partner Traction for keeping us informed and data-driven in a world where insights are key. A special mention to our education partner Stanford Seed for empowering entrepreneurs with the skills and knowledge to scale new heights. And of course, to the Leela Palace, Bengaluru, our hospitality partner, for welcoming us to this stunning venue. For those of you live tweeting or capturing moments for the gram, don't forget to use the hashtag #ETStartupAwards and join the conversation as we celebrate a decade of brilliance in the startup world. On that note, let's buckle up because tonight's going to be full of surprises and a lot of fun. Let's make it an evening to remember here at the Economic Times Startup Awards. To officially kick things off, it's my pleasure to invite someone who has been a key figure in shaping the vision of the Economic Times and its commitment to recognizing entrepreneurial talent. Ladies and gentlemen, please join me in welcoming the Vice Chairman of Times Internet, Satyan Gajwani, to say a few words.
Ladies and gentlemen, good evening. As we stand here today, ready to celebrate a new galaxy of winners at this landmark 10th edition of the Economic Times Startup Awards, my mind goes back to 2016. In 2016, like this year, the jury was chaired by Mr. Nandan Nilekani. That year, we gave the Best On-Campus Award to two young entrepreneurs who had just made a prototype of a product at the Incubation Center of IIT Madras. When they came on stage to accept their award and they thanked ET for the recognition, the CEO said, and I quote, "We need to get our first product out, and the day we meet our first happy customer, then we will truly justify something like this." That CEO was none other than Tarun Mehta of Ather Energy, whose scooters are now ubiquitous on India's roads. Ather recently filed for an IPO seeking a $2.5 billion valuation. This ride from campus to capital markets happened in front of our own eyes in a matter of just 8 years. I remember the same year, 2016, we awarded the Bootstrap Champion Award winner, a small fintech that was notably profitable from the beginning. That year, it made a profit of 65 crores on a revenue of 120 crores. As many of you would have read in ET recently, this year, that same company just posted a revenue of 8,300 crores and a profit of 4,700 crores. That company was, of course, Zerodha. And in 2016, the winner of Startup of the Year was Freshworks, which subsequently went on to list on the NASDAQ and continues to thrive as one of the largest SaaS companies to have come out of India. These are the stories from just 1 year, 2016. I stand here with a sense of immense pride and joy in having had the privilege to witness the incredible journey for a decade now. These awards have offered us a ringside view of one of the world's greatest value creation sagas, that of the Indian startup ecosystem. But I must say, what we at the Economic Times feel the most grateful for is not just watching the journey, but having been able to help develop the community that's been built around these awards. It's all of you today who've gathered here, who help, mentor, and invest in each other and help build great companies together. It's this spirit of entrepreneurship that this city exemplifies that's such a joy to chronicle, to celebrate, and to be a part of. In bringing attention and recognition to this ecosystem, I think that the ET Startup Awards has played a small role in building the cycle of paying it forward. Winners come back as jury members, and as they go on to become unicorns, they invest in the next wave of entrepreneurs. Among this year's jury members, Albinder and Ritesh are both past winners. Sachin Bansal, who's been on the jury for many years, was an angel investor in Aether. And there are many, many more such stories. We're especially grateful for our esteemed jury members over the years, and the team at Economic Times, who deeply studies the ecosystem to support our jury members and helping them make rigorous choices for winners. Thank you to each of our jurors, and especially to Nandan, the architect of India's wildly successful digital public infrastructure, and the chairman of this year's jury, and a longtime supporter of our initiatives. Today, we're honored that joining us shortly is Mr. Ashwini Vaishnav, Minister of IT, Railways, and IMB, quite the portfolio. He's been a steadfast champion of India's startups, and indeed a supporter of these awards as well. And I'm sure we all look forward to listening to his thoughts soon. So thank you all for joining us today, and welcome to the 10th edition of the Economic Times Startup Awards. Thank you.
Thank you, Satyan, for always being a steadfast supporter of innovation and entrepreneurship. Up next, we have a fireside chat with someone who's no stranger to the highs and lows of building a startup from scratch. A pioneer of India's food tech revolution, he's redefined how we order food and successfully navigated the challenges of going public, transforming a disruptive idea into one of India's most recognized brands. His journey has been nothing short of remarkable, from launching Zomato as a humble food discovery platform to making it a household name in over 20 countries. Through it all, he's remained a steadfast advocate of innovation and resilience, even in the face of adversity. Tonight, he's here for a candid conversation about the state of the startup ecosystem, scaling challenges, and everything in between. Please join me in welcoming Dipinder Goyal, founder and CEO of Zomato. And to guide us through this discussion, Samida Sharma, editor of ET Tech. A big round of applause to both of you. Once again, everyone.
I was telling Dipinder, I won't believe till you take the flight that you're going to be in Bangalore. So we all can pinch you and know you're here.
I'm glad to be here. Thank you so much.
So Dipinder, you won Startup of the Year in 2021. That was seminal for Indian startups because the first large consumer internet company to go public. So we're going to break the conversation, talk a bit about your journey of taking Zomato public, the diversification play that you've done beyond food delivery, and all of the new things that you're getting into, including entertainment and going out. So I'm going to, by the way, when was the last time you were here in Bangalore?
2017, I think, 7 years ago.
Wow. Wow. Nandan?
I mean, it's not actually, I mean, you don't need to come here to build a startup. That's what people here think, but
it's okay. All right then. In fact, he's not in the montage because you did not come to Bangalore, but that time you had COVID. So, okay, so Dipinder, in 2022, a year and a half after you listed, I remember in one of our chats, a private chat, you said that you were trying to make, you were working the hardest, you were trying to make an average company great. Okay?
When was this?
December 2022.
Okay.
Yeah? Tell me what happened from the time you listed, which was extremely exuberant, and then 2022, then the Blinkit acquisition happened. It obviously affected the stock. What was your thought process? Take us through that.
So you are referring specifically to that comment of average company great and...
Yeah, and where are you on that scale of 1 in 10? Yeah.
Okay. So, I mean, so right now I would rank us, let's say 7.
Okay.
Intentionally so, because if I go more than 7, then, I mean, that's the beginning of the end, right? And if you're less than 7 that year, I mean, that's not cool. That's not cool. I mean, I will tell you what happened to us post-IPO. I mean, the IPO was good, and the business was doing what it was doing. And a lot of people made a lot of money for the first time in their life. And these are competent people, okay? Competent people can't really recognize that they are being, they are actually being complacent. They start substituting, they don't really seek progress anymore. They just start filling in the time. Okay?
You're talking about Zomato.
Zomato people, okay, senior folks. So they don't want to tell themselves that I am checked out. They're really putting in the hours. They're basically stalling all the work. They're really tuned in that way, but they're actually not letting any progress happen. So that's what we had come down to. There was no work happening inside the organization for a while. So that's what I had to do. I had to literally clear out pretty much everybody who had lost their drive, and then restart the organization and reboot the organization again.
So when you say you had to clear out, you mean you had to do top tech changes and get the energy back?
Yes.
Okay. And where are you right now? I mean, everybody in the ecosystem talks about how you kind of rolled up your sleeves and got into it. You've been extremely execution focused over the past 2 years. Where are you right now in terms of your organizational role at Zomato?
I mainly do the HR guy role nowadays. So, and the team is pretty competent and they're very, very clued in. I think, and we are a very high trust team, and nobody wants to do somebody else's job, which is typically not true for organizations. Everybody wants to do somebody else's job. So everybody recognizes, okay, this person has this strength and this person has this strength. So we really go to each other whenever we need help or whenever we need input. So my team comes to me whenever they need me. I go to them whenever I need them. So it's a really balanced team right now. So it's okay.
I know, you know, you've said this before as well. Zomato, if I look back, has had many ups and downs, including the time that you went public. You had told me in that 2021 interview that you had 6 months of cash left. And it was a contingency plan for you to tap the public markets. Tell me, what has been that point when you felt that, you know, this was your sort of lowest low as a founder? I mean, Zomato's had many, but...
I think the lowest lows, I mean, true answer, yeah. Of course.
Yeah.
The lowest lows are not when you're running out of money, when, I mean, of course you can fight back, you can figure out something, you can actually pivot, you can do all those things. My lowest lows happen when the people that I trust, they actually don't show up. So.
Has that happened?
Of course it happened and continues to happen. So. And like, I am sure I also do that to people sometimes. Like, they would really expect me to show up, and I don't show up, and that would be their lowest low. I think those lows are very, very personal, more than business. So.
But for Zomato particularly, I mean, was there a point that you felt that, this is, not sort of give up, but, it was sort of unsurmountable at one point, and what was that in your 15-year journey?
I mean, the only one moment like, oh shit, we are dead, was when Swiggy raised $1 billion and we had $35 million in the bank. So,
I remember meeting you multiple times.
That was bad.
So, that brings me to the question. You've always sort of, till 2016-17, when you did the Runner acquisition, you were clear you didn't want to get into the delivery part. You didn't want to roll up your sleeves. From that to now, Zomato has become such an execution and operations heavy company. In fact, your competitors talk about, how you've kind of really upped the game there. What made that change?
Survival instincts, to be very, very honest. Like, I mean, if we hadn't done that, we wouldn't be here. So, getting into Runner and Last Mile was something that we needed to do to survive. Blinkit was a survival instinct deal.
Why do you say that?
See, the food delivery network, the Last Mile is quite large, and that's a moat, the number of riders we have on the road. And a quick commerce company, let's say if there's a new quick commerce company which has that large a rider fleet, that can easily enter food. But food can't enter the quick commerce business easily because you have dark stores, you have all the supply chain and so on and so on. Food delivery is like 10% as hard as Blinkit. Like, Blinkit is much, much, much harder to execute. So even getting into Blinkit was that if we don't do this right now, 10 years from now, we're done. So everything's been a survival instinct. I mean, in hindsight, you say, oh, wow, vision, strategy. It's all nothing, none of those things. Like, we just,
I didn't.
I mean, people say that, but there's absolutely none of those things. It's survival, purely survival, like nothing else.
I've seen you long enough, so...
We're very lazy, actually. We don't want to do more things. We want to do less things, but we want to survive. That's it.
No, survival, and I also think you've been able to see a lot of things which are going to come and become big early on, which maybe others have not really been able to see. I think quick commerce was, while grocery was something that was happening, obviously there was Instamart. You took a bet on it despite being a publicly listed company, despite the fact that the market did not react to it too well. Were you preempting that the growth in food delivery is going to start petering off and you needed to diversify and broaden your user base?
No, I just told you why we actually did Blinkit. It was pure defense, nothing else. And it's not like we started it and we were the first ones. We've always been the last player to enter any space. Zepto did it first, Instamart started then. Blinkit was the last one to enter quick commerce. I think we just learn from everybody else's mistakes faster and we execute better. So egos are low at our side. I think that's our moat.
So, since we're talking about Blinkit, quick commerce is something which everybody wants to know more about. It's highly competitive. Everybody wants a slice of it. What are you making of the market? And also talk a bit about the regulatory front and the fact that, there is a big constituency, which is the Kirana and the mom and pop stores. How does all of that dynamic sort of fit into Blinkit and your strategy for quick commerce?
I think the growth of quick commerce actually has been a surprise for us as well. We didn't think it would grow this much. And what we have noticed is that Blinkit is not really eating into the Kirana walas at all.
Okay.
Blinkit is not really even affecting companies like DMart, because the DMart CEO also said on a call that quick commerce is not actually affecting them. So I think we're more or less eating into the Amazons and the Flipkarts, the e-commerce sector, as well as the modern retail in the larger cities. And we are also increasing consumption to a little bit. So I think that's where we are.
The overall market.
Overall market size. So I think that's where we are. And I mean, people have various points of view, but this is our point of view. And regulation-wise, I mean, we'll do what the government asks us to do. I mean, we're citizens of the government. So.
I want to ask you, because we're talking about diversification from food, you got into quick commerce. You've been doing a bunch of things on the outdoor ticketing with some of your efforts, but they were not really that big. But you've gone and done an acquisition of Paytm Insider. Are you aware that the spaces that you get into, the other players sort of get a bit rattled, and especially the incumbents?
Really? Because at
Book My Show is...
Because at our end, we are very super scared of everybody else. We're
really?
always paranoid.
Who are you scared of?
Book My Show, they're like 20 times our size. Like, what do they have to be scared of?
Okay.
Yeah.
So how...
And they have like contracts with people which are decade long. There's no way we can break them. So I don't know.
Okay. We're going to talk about this a year later. But tell me, what's your plan for district and the entire... How do you see that fitting into your overall consumer bet?
So see, 6 months ago, we were in 3.5 businesses, I would say. Food delivery, quick commerce, hyperpure, and dining out. Dining out was like a orphan child, and it was part of the main app, Zomato app, but I don't really want it to be there, okay? Because the food delivery use case deserves a separate standalone app. That's what I think. So I wanted dining out to get out of the app and have its own app. But dining out as a use case standalone doesn't really deserve a separate brand. Okay. So when the Paytm thing came to the table, we're like, okay, now that separate app can make sense. So then we lapped it up. Now we're going to join it up. And now we're going to be in 4 of these businesses instead of being in 3.5. So that's how we think of it.
So are you thinking of this as a separate...
District is going to be separate app with dining out, plus ticketing, concerts, events, maybe shopping, staycations, everything that you do stepping out.
So how much of all of this diversification play, Dipinder, is also considering that you're listed and you want to grow in the public market in terms of, your market cap, your share price? I remember, again, I'm quoting you from 2021. You said you wanted to acquire or look at companies which would not add 1 billion of market cap to you, but 10 billion. Is that a consideration when you get into buying assets?
I mean, back then it was a very different state. We were thinking of buying, but now we have our hands very, very full with what we have. There's no buying nothing. There's no, getting into new things. We just have to execute these 4 things right. And the Paytm deal is the 3.5 to 4, right? It's not really something new. We already had a team. We were already in the business. We were actually a distant number 3 player. Now we're actually a distant number 2 player. So, there is no buying anything new. So we're very, very happy with all of this, with what we have on our hands. And from a public market point of view, we don't operate like we are a publicly listed company.
What do you mean by that?
We do our job and the score takes care of itself. We dissociate ourselves.
You don't look at your share price at all.
And we don't even act to the expectations of what investors would say. We believe in, okay, this is the right thing to do, so we do the right thing. Luckily, the public market has been responding nicely so far. And I'm very, very sure things will change. And they will then change again. It's a life of ups and downs, so it's going to happen.
What is the message that you have to give for a lot of Indian new age startups which are looking to go public, and there is a whole set of them, unlike in 2021 when you you went public, there was Nykaa, Paytm, a few others, Policy Bazaar, and then there was a long dry spell. What do you think needs to be considered when you're prepping yourself to go public, especially in a market which a lot of people think is frothy at this point?
I mean, so see, our timing of the IPO in hindsight was great, but we didn't time the IPO, right? So we actually started the IPO process when the market was at its like lowest point. So first of all, I think like companies should not think of timing the IPO well. Okay, they should think of an IPO as part of a long-term step, long-term journey, and like you do it whenever you are ready for it, rather than right now the markets are great, so I will do this and that and that. So I think people make too much of a big deal about it, and they need to chill. Like it's just one more thing in the journey, which is going to be decades long. Like so.
But do you think there are a lot of companies which are going public, which maybe need to are doing it because the markets are hot?
Yes, and they may not be yet ready for public markets. And in public markets, like private markets, if you are actually private, you are forgiven for a lot of things. The public market is...
Like what do you mean by that?
I don't know, various things, like so many things. Like, and when you are public, the only way to sleep peacefully at night is to be absolutely transparent with anything that's going on, right? So there's like zero lying or trying to like manipulate the stock price. No, absolutely nothing. Don't do any of those things. Like be transparent. If the stock price goes down, it's cool. If the stock price goes up, it's cool. Be transparent and honest. And if you have the organization that can pull that off, if you don't need to hide anything, then public market life will be peaceful. But if you don't have that organization which can pull that off, public market life is going to be super hard.
You know, that brings me to the point that over the past 2 years, we've seen a lot of corporate governance lapses in the ecosystem. You'd be aware that there are a lot of companies which have seen founders, there are allegations of financial fraud, etc. What is your take on it?
I don't have a take on it. I mean, we do our job well, and I mean, people do different things.
But do you think it tarnishes the entire image of
that's
New
up
Age?
to you and me and how we actually perceive those things, right? So these things are going to happen. No matter which country you go to, blah, 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 there will be a statistical incidence rate of rogue founders. You can't be zero on it. Come on. Can you be zero? Any country, anywhere, like the US or anywhere else. So it's actually a statistical incidence rate of some founders going rogue. So, I mean, we have to be all aware of what we are trying to build it cleanly, build it nicely, and investors have to take more accountability for what's going on inside the companies that they actually participate in. Because InfoEdge really was brutally cool with us. So I mean, we really had to report everything. We had to be transparent all the time. We had to be really, really clean. They left zero space for my weekdays to consume me.
Yeah.
Okay.
Yeah.
So, I mean, investors have to make sure that they're holding everything tight. And unfortunately, that's not being done the way that it should have been done.
So, you've also been in the sort of public space through your appearances in Shark Tank. We've seen a lot more of you. I remember back in the day, you would be like, we want to hide, under the rock, not be seen. That's changed quite a lot for you, right? And no?
No.
I mean, I'm not talking about like public appearances like this, but...
No, Shark Tank, I I really went there to, so the startup culture of startup culture of India is too much about valuations. It's too much about like showmanship and so on. I just went there to like set a different narrative, like be real and change how people perceive how startups should be built. I just went to do my job. I felt it to be my moral sort of obligation to go there once. I just did one weekend, that's it. I didn't go there for a long time. I just did one weekend shoot, just like gave my point of view on how startups should be built and got out of it.
You're not going back?
I unfortunately can't go back because Swiggy sponsored Shark Tank this time and kicked me out.
What do you mean kicked you out?
Apparently, that's what I heard, that they said that this is the sponsorship and Dippy can't be on the show.
Oh, wow. All right. But coming to Swiggy, since you mentioned, that's quite hilarious.
I mean, it's okay.
So what happens to Swiggy IPO is a lot of it is contingent on how you've performed. It's a duopoly in the food delivery market, not so in the quick commerce. What do you think the dynamics will be to have your closest competitor in the public market?
I genuinely don't know, and we don't even think about it. So we'll see what happens. So, I mean, what's the point of thinking what can happen when you don't really know what will happen? Like, I mean, better get an extra hour of sleep. So.
But you've always had this competitor, whether it was food delivery, whether it was any. I mean, is the closest rivalry, you know, after cabs, which was sort of over, and then there is both of you.
Cool. So
you definitely have a point of view.
So let's say I think about this. I hear about other people's point of view on this. How is it going to change any action that I take right now? Nothing, right? I can't do anything about it. So I don't seek information, points of views which don't change my actions. So I don't even, I mean...
How zen like, Dipinder?
It comes from practice. So.
All right, we're out of time, but thanks so much.
No, thank you so much for having me here.
Yeah, thank you.
Thank you, Dipinder. Thank you, Samvida. Great to hear those valuable insights and also a glimpse into Zomato's incredible journey. Also, perhaps a case to have these awards in Gurgaon next year. It's always inspiring to hear from someone who's been at the forefront of the startup space, navigating the highs, the lows, and constantly pushing the boundaries of what's possible. Let's now deep dive into what lies ahead for the next decade of India's startup ecosystem. With over 100 unicorns and more startups entering the fray each day, the landscape is evolving at a breakneck pace. Our panel today will explore what will shape the next decade of Indian startups, focusing on what it will take to build sustainable businesses, foster innovation, and stay ahead of the curve. From changing consumer preferences to scaling in a competitive market, there is a lot to unpack as we look ahead. To help us decode these trends, we brought together some of the brightest minds in the ecosystem. This panel isn't just about what's happening today, but about charting the path for the future. And we're lucky to have leaders who've been at the forefront of India's startup story. To lead this conversation, I'd like to welcome Nandan Nilekani, Chairman of Infosys and the Chair of our jury this year. Welcome, Nandan. I'd also like to invite three industry leaders who have not only set benchmarks in their fields, but have also redefined what success looks like for startups. Piyush Bansal, co-founder and CEO of Lenskart, who's transformed eyewear retail in India and beyond. Adit Palicha, co-founder and CEO of Zepto, who's disrupted the quick commerce space at just the age of 21. And Subrata Mitra, partner at Axel, one of the most prominent venture capitalists backing some of India's biggest startup success stories. Do tag your takeaways with hashtag ET Startup Awards. Over to you, Nandan.
Thank you, Abha. And I'd like to start by doing a quick... Thank you, and It's a very exciting group, and we have an exciting panel. At least he's wearing the Stanford T-shirt. I mean, and so what we'll do is we'll do a quick summary of what happened the last 10 years, and then move into the future. And I sort of broke this up into multiple segments. The first segment, of course, is the growth of startups. And I was looking at the data, and there has been a dramatic increase in the growth of startups in India. And today, this year alone, 2023 was about 35,000 startups. So as Satyan was mentioning, when the ET Awards began, we had less than 1,000 startups. So the Startup Awards are also a startup. And today we have more than 100,000 startups. And this has really dramatically changed everything. And where did these startups come from? Startups begetted more startups. So we did an analysis and saw that out of Flipkart, we had so many, and then Flipkart had PhonePe, and then PhonePe had one card. So it's like grandfathering of startups is going on. And you see the ones from Zomato, Swiggy, Zoho, Paytm. So there's a dramatic growth in startups from startups. In other words, people who got their skills, maybe some of those guys that Dipinder left did more startups. So I think so we see a huge growth of that. And it's not just that startups beget startups, but startups also came from large companies, from Infosys, from ITC, from GCCs. And then, of course, the ultimate archetypal startup is 2 college dropouts, which is our friends here at Zepto. And, you know, in the style of Bill Gates and Steve Jobs and now Adit and so on. So I think we are seeing startups from everywhere, and that's the growth we are seeing. So I just want to talk, what have you seen? I mean, the founder density has just gone through the roof. What's happening here?
Clearly, I mean, I probably don't keep track of the numbers like Satyan does, but you know, the number of people walking through the door at Excel has actually skyrocketed. So we probably now, you know, in 2015-16, we were probably 3,000-4,000 startups in a year total that would come to us. That number must be 13,000, 14,000, 15,000 now. So 5x growth in that period of time.
And the quality of the entrepreneurs?
Oh, absolutely amazingly changed. I think, you know, the ability to deliver scale, that actually creates so much of, you know, mental bandwidth that people are now not even scared about things that, you know, we used to think, like in the early days of Flipkart, you know, we were like 50 orders when I came in. How do we get to 500 would be something that we would worry about. Today, that is like negative infinity. You know, if you do 500 orders, you're not even on the board. You have to do 50,000 orders to get started, right? So I think we, as an ecosystem, we have seen so much scale around us, and some of it, you know, all the public infra that you have helped build. Transactions are becoming like that, right? So people are now able to visualize things at like 100x the scale that we were seeing 10 years ago.
Piyush, what's your feeling? I mean, the whole talent thing is a big thing, and how do you keep guys when everybody wants to go and start another startup?
I mean, that's the main thing, to be honest. I think if I look at 10 years back and now, the only thing that has changed is to keep talent density very high has become harder and harder, because there is only that much high quality talent, and to keep them, to hire them, to retain them, it's not easy, which means you have to up your game all the time. And I think that is the game. If you can build the right culture, and everybody has their own culture which works for them, and you can figure out a way to attract the best talent and retain them, rest everything can happen. Unfortunately, I think, or fortunately, I think in the past 10 years, we have been focused on tangibles. The intangibles are only getting the focus now because, and I think it is now that people are beginning to realize that human resource is not human resource, it's human capital, that we will get to the journey of globalization. Because I think to build a company outside India and to build a global company, that is what is the milestone we need to cross as a country, as a lot of companies. If we can focus on that, I think we can go global.
Great. Adit, what gave you guys the courage at 19, first year college, Stanford? dump all that and start a company?
Yeah, no, I want to start by saying I think I've made the mistake of taking the Silicon Valley dress code too seriously. I think I'm probably the only one that's done that. But no, I think we never really started the company with the objective of starting a company. KV and I came to Bombay during the pandemic. We loved coding and building as kids, and we had nothing really to do. So we said, might as well, build something fun and solve a problem around us. And that was a hobby growing up. And we did that for a couple of months. I think the most pronounced problem at the time was grocery delivery. First wave of the pandemic, chaos, getting grocery. Online would take 5, 6, 7 days in those times. And even offline, getting grocery was a nightmare. And so we said, might as well just help some of the neighbors around us. Most of them were elderly. And we said, okay, let's just get on a bicycle, deliver groceries on a WhatsApp group. And then it slowly iterated into an app. And then that slowly iterated into a model where we build warehousing and logistics over the course of about a year. And I think what gave us conviction to actually take the call to drop out was not some big ticket, let's go for it, but it was real sort of input customer product market fit. I mean, we were seeing customer love very early on in the journey. And after we saw people using the app and using it multiple times, us growing organically and scaling, that's when we knew we were really onto something. So it took us a year to get there, but then when we had really solid foundations, we say, hey, we can take a risk and go for it.
So did you take a deferment or you just quit college?
No, so we took a year off first, and then by the end of that year, we had product market fit, and then we went for it. And Y Combinator was probably the biggest accelerant into us feeling confident in doing that, because they actually gave us the framework to say, do you have something real, do you not have something real? And the ultimate input metric for a consumer company at the time, at least for us, was retention. And so we could see retention, and we said, Y Combinator says we've got something, hopefully we've got something. So yeah.
Great. So the next thing is, what happened to the money? Now, the VC funding grew dramatically, and we had that bubble year of 2021. It's come down, but still there is a lot of funding that is going on. But what's interesting is the number of unicorns being created. Even in these dull years, there have been unicorns created. And every year there have been more and more unicorns created. This year itself, we have Rapido, Aether, and Perfios. And what's important, and Deepika mentioned it, I think the growth in IPOs. And in this period, you're seeing a steady growth in the number of IPOs. So clearly, capital, the whole capital game has changed from just little VC money to money from different rounds, from public markets and so on. And so what's changed in the last 10 years on money?
So I guess, investing is about these two cycles, right? So greed and, being greedy and being scared. So I think we keep sort of oscillating between those two. And it'll be hard to say that it is all behind us, because I'm sure, all the people who Dipi has made into multimillionaires, they are starting to invest into other startups, which will now go and start looking for money elsewhere. So this is a cycle, but like you said, there is a new pool of capital that has got opened up now, and we should all seriously start looking at what does it mean for our startups and for all our companies. How do we build in a sort of a, sensitive way so that we keep public market investors in sight when companies start to grow. So you look at that right now, right in the beginning, when you think of companies, you think of when will they go IPO? Maybe not immediately, but we are starting to see profitable companies, even with 10 or 20 million of their own revenues, are now thinking about it, because they now see that in the next 10 years, this 10 million revenue can become 100 million, right? So you grow at 20-25% year on year, and you have some overall efficiency so that your bottom line grows faster than the top line. That's actually a valuable property in the Indian public market scene. So it is being taken very seriously by many of our companies across the board.
Sure. Adit, your last valuation was at what value?
It was 4.9 billion post.
And you publicly said it will go up to 50 billion in market cap.
hopefully in the next decade or so. That's
Decade.
the ambition.
That's too long.
That's the
Yeah,
ambition.
decade. Why decade?
I agree with you. We're trying to do it sooner.
All right.
Aim high and do it faster.
All right. So what is your experience of capital raising and the changes that you're seeing?
Yeah, no, I think for us, we, pretty early on in the company's life cycle, we started in 2021 effectively is when we got product market fit and started raising capital. First 7-8 months was euphoric. 2021 we raised 4 institutional rounds back to back in the span of 9 months, right? Then as a 9-month-old company went through the worst capital markets situation since 2008. As a very early young company in a highly capital intensive space. And, pretty quickly, I think that, at the time was very difficult and devastating because we had scaled very rapidly and we said, okay, we have to build a lot of operating leverage very fast. But looking back at it, I think going through the 2022-2023 period has given us DNA of fiscal discipline and operating rigor, which today is paying dividends, right? And so I think going through that early in the company's life cycle, seeing near-death experiences, almost running out of capital twice, having to raise a round in 2023, which was back-breaking, and I'm sure the founders that have tried to raise capital 2022, 2023, there'll be lots of horror stories, but going through all of that, having that embedded into the DNA, not just for me, but for the leadership team that's stuck with us since day one, has been very helpful. And now obviously we've raised, 2 large rounds this year. And, we think it's on the back of us being able to prove execution for those 2 years, solving for most of the downside risk very early in the company's life cycle, and then talking about the greed factor, saying that, hey, we've solved the downside risk, now let's go for the big leagues. And that's been what it is. But I think one thing that I'll mention is, or maybe the 2 quick things that I'll mention is, one, I think raising capital has become a lot more detail-oriented. It's been a lot more. It's a lot less about the high level. What's the India story? What's the potential for the company? It's a lot more about let's get into the operating mechanics. What's the leverage that you're building? What's the return on equity on every dollar that you're investing? If you're investing capital, in our case, what are the payback periods for the store? What's the payback period for every customer that you're acquiring? What are the initiatives that you're building to keep improving those payback periods? That level of depth, candidly speaking, most of the very aggressive investors, when we were raising capital in 2023, they were no longer investing. So we had to only go to much more traditional, much tighter pools of capital that pushed us along those lines. And I think now, when I speak to more traditional VC or more, conventional VCs, they're also going in that direction of going into details and operating mechanics. And the last piece that I mentioned, I think you spoke about public markets and raising from capital from public markets, right? I think for us, what's starting to become evident and what happens with most mature ecosystems in internet, if you look at the US and China, is that an IPO stops becoming a climactic event. It simply becomes a capital market strategy,
sure,
right? And I think that's starting to happen, where there won't be much of a difference if you're a public company or a private company. And you can, if you go public because you see, real value in that as a capital market strategy for the long term. I think one of the best companies that have done that is, for example, Airtel, right, 2 decades ago. So hopefully that happens this time around in startups.
Great. Piyush, what's been your capital journey, and you're also looking at public markets?
See, for us, I think, to be honest, we didn't need as much capital. We didn't have as much competition as some of the other categories, and we had some early mentors in the business who told us what are the things that would matter. So I think from a unit economics perspective, we were quite okay. From a capital raising journey, I think we raised almost $500 million of capital. 350 million went into an acquisition. 200 million is in the bank, right? So we haven't, and we have done over $1.2 billion of secondaries.
You've been making money from day one or what?
No, it's just that the unit, I think in India we understood very early. We had this early on, we got Manish Chokani as one of our advisors. And Manish told me, Piyush, in India, if you want to succeed, keep your margin at 70%. Right? If you're not at 70%, it'll always be a tough life. I think that kind of hit me hard enough. And then when I met, once I got an opportunity at a Sequoia event, I met Tony, Zappo's founder, and he told me that, I don't believe in this LTV CAC, just remember this. If you can recover your money in the first transaction, that's all that is important. Rest, everything is a story, which, in a cyclical turn, you'll be in, there'll be a bull's market and then things will come down. I think we held on to those principles. I've always found that more than capital, the quality of capital is very important. Right? There have been instances, and sometimes I think we as founders also get carried away into raising valuations too much. It's not sometimes the best thing for the company. Getting right quality partners, if one wants to go really long term, I've often found getting obsessed over valuation is the wrong thing for the company. Because, see, India market is trading at multiples which many international markets are not today. And those macro factors could change in times to come. But that shouldn't take away, okay, now what we want to do. So I always say valuation, etc., should not be founder's job. Our job should be to have our vision clearly on the impact that we want to create, then valuations will keep changing. That said, I think money is becoming smarter over the last 10 years, right? We have seen the journey of the Tiger Global journey. We have seen the SoftBank big ticket size journeys. We have seen, investors becoming more cautious about things. So it's evolving. It's evolving. But I do really think one should use capital very cautiously. It is one of those things which makes you not deliver your A game every now and then. So if the company starts if the company starts treating, if a rupee to a company starts looking like a lakh rupees starts looking like a rupee, which often happens, and I've seen in that journey, in my own journey, something is going to be wrong in the future. Right? So
yeah, thanks. So I think I'll quickly go. Of course, we also have built all this digital infrastructure. I won't harp on this, UPI, Aadhaar, and you can see the change in pace of all these things. And this has made a big difference, but we won't spend time on this. But I will come to corporate governance. Now, these are just headlines I picked from the Economic Times. You can see how many different cases are there of all kinds of accounting, disasters, fraud, and so on. So, Subrata, are the VCs to blame for this?
I mean, I don't know if I want to take the entirety of the blame, but let's just say that everybody probably has a part to play in it. I mean, if you are pushing the founders beyond reasonable limits, what is that human being going to do? They're probably going to find some shortcuts at some point of time, and that's human nature, right? So are we trying to push that boundary too much? But at the same time, I think there are situations where investors don't know about it, and then there are situations where investors can guess that something is going on. So I would say if we have a situation where we can guess something is going on, we need to act very, very rapidly. And as long as all investors are doing that in earnest, I think we'll have a much better ecosystem. But there are clearly situations where, because we are at board meetings maybe once a quarter, and we are not doing forensic audits of companies for several quarters at a stretch, it is sometimes very hard to know if there is something really wrong until it's like really, really too late. So I would categorize it in those two categories. If you get a sense, and sometimes markets actually tell you. You may not know as the guy on the board, but other people might start to know that something is wrong with your company. And you have to take those signals very seriously. So to that extent, we are doing it. I would say, we are probably moving in the right direction. And again, I think everybody has to share the blame a little bit.
I'll just move quickly. The other thing which is, I think, what I call as bridging the Mumbai-Bangalore divide, which is that earlier, 10 years back, all this digital tech was only Bangalore and Gurgaon. I'm sorry, Deepinder. 10 years back, it was mainly in Bangalore and Gurgaon, and now the large companies of Mumbai are doing tech, and IDFC First has a great tech story. Kotak Bank has, State Bank has YOLO. So I think we are seeing a lot more of digital transformation being done by large companies. Tata is doing new. So I think we are seeing that trend where the startup world has excited the incumbents also to do something. And one other trend is the disruptors getting disrupted. In other words, e-commerce came and then quick commerce came and disrupted e-commerce. The cab hiring came and now you have Rapido and Namayatri disrupting cabs. You have, earlier in education you had Byju's and Unacademy, now you have Physicswala. So in every sector you're seeing new players coming which are making a difference. So I thought we'll just focus on the rise of instant gratification and the future. So Adit, you personify this, right? I mean, isn't this all about instant gratification?
I think there's definitely some truth to it. There is, some magic in getting atoms delivered to you in a few minutes, clicking on an item and seeing it in front of you instantly. There is definitely a delight factor. I think but it does go deeper than that. I think when we talk about convenience, and this is, what I've heard a lot of, investors and operators in consumer internet say, they trivialize the word convenience. Say convenience as if like, who cares really that much about convenience? It's a very thin value proposition. It's all about price. It's all about maybe selection, et cetera, right? But, when you look at, a play like us, or even if you look at globally what's worked in consumer internet, there's often something much deeper than just the instant gratification that's driving product market fit. I mean, if you look at, let's say, the user stickiness and the retention of a platform like quick commerce, it's multiple times better than even the best consumer internet formats that have come prior to us, which should tell you something. And if you look at the first 2 to 3 years of quick commerce, again, people trivialize it saying 10 minutes, who the hell needs anything in 10 minutes, right? What people didn't pay attention to is, hey, customers love the product. Why do they love it? Is it frivolous or is there something real behind it? And we spoke about it briefly before this conversation, is that when you actually go deeper and you speak to customers, they tell you that, hey, we like buying products in small tickets multiple times a week. And it's not just because it's convenient, but it's also because, a large portion of our basket is perishables. We have to buy that fresh multiple times a week. Or for example, I don't have a four-wheeler. I can't really do a bulk stock up use case. Or I can't, for example, I don't have a large amount of storage space at home. Or, in many cases, I've got low amounts of disposable cash flow. I'm an MBA student. I don't want to put, 60 to 70% of my disposable cash goes into grocery and household essentials. I don't want to put all of that up front at the beginning of the month. I'd much rather do that in small tickets multiple times a week. And so, when you double click on it, it goes beyond convenience and gratification and it goes into consumer patterns that I think are fundamental. And, when you look at why quick commerce is working in India, it's, I think, largely because we've been able to cater to that small ticket multiple times a week use case that is unique to Indian commerce, which if you go to the West, for example, it's precisely the opposite, right? It's large baskets 1 or 2 times a month. And the data point here is the average frequency of transactions in India on grocery and household essentials is 2.2 times a week. In the US, it's 2.4 times a month, right? And so,
what's the average ticket size of a purchase on Zepto?
Yeah, I mean, it varies, you can see around 500 rupees-ish, which if you look at even if you look at the decade prior, you look at grocery even in the offline world, it's been around 480 rupees. So, yeah.
Piyush, I mean, you've built amazing multi-channel immersive experience. Why has that been so critical for your success?
See, firstly, I would say there's no rise of instant gratification. It's the only truth that has remained permanent, right? Rest everything has changed because,
so it was
it's
always
only
instant gratification.
People always want it, right? I mean, nobody wants SEO. People want SEM. That's why Google makes so much money because people want to get the click and get the money now. That is instant gratification. It's just that people are now beginning to provide that more and more. So it's going to remain forever. I want faster, cheaper, better all the time, right? And so coming to your question in omnichannel, see, overall, fundamentally, consumers want everything, right? They want to have their journey of enjoying themselves in a mall and they want to enjoy their online journey. They want all of it. And economically also, if you look at India, 1.2 billion, you look at any developed market, what percentage of people are shopping online? 10, 20, 30. people are shopping online. But what we often forget is there are 70% people who are maybe not shopping online, but they're definitely browsing online. And which I call it as and all the marketing, advertising money, all the product innovation money that we are spending is going to that 70% also, because they are coming and engaging on your platform. Now, everybody's trying to maximize. If 100 people are coming on your website, assuming your conversion is 4%, let's say you'll do good UI, UX, you'll spend millions of dollars, 4 will become what, 6, 7, 8, right? But technically you are playing within the 30%. 70% of everything else you are doing is going waste. So omnichannel is nothing, right? Omnichannel is saying, okay, can I add a little bit of assistance to get that person who's influenced online to convert in some other form? So that 7-8% conversion can actually go to 30-40% conversion, and then you can have your first time LTV to CAC. There's no need of LTV to CAC. You can actually make money on the first transaction. And from a consumer experience perspective, you know, I'm having a higher quality of life in all spheres. I want an iPhone. I don't care whether I'm buying it online or I'm buying it offline. And it also depends on what the company wants to do. In our case, people come, we are not mistaken with people come to Lenskart to buy a higher quality of specs at lower price with a better design and faster every day. And there is no end to it on how much better it can get. Now we have to just keep delivering that in all spheres. We are not a medium company. So.
Okay. And how early did you realize this? The fact that omnichannel will be super important for you?
Actually, omnichannel is a buzzword, if you ask me, right? It's a word where, you know, investors like to tag, you know, models of what works, what doesn't work, and
sure. But investors get the blunt of everything. But please explain.
Yeah. See, when we started as a pure online company, there's a tool called Bengaluru where you go and ask customers surveys of people on your website. So we often used to ask why people who are not buying. And one of the things that 70% people, maybe 80% used to say that I like to touch and feel and try. It's not rocket science. Now, if we were chasing valuation, if we wanted to make our investors happy, I would not even look at that input. I would just say this will lower my valuation. I'll not be an online company. I'll not be a tech company. But my customers wanted to touch and feel. So I just planted a store between my office and my home, you know, and I saw that for first month, I was doing better than every optician because these people were already online influenced. We were delivering higher quality at lower price with better content. So that's what, and now after a few years when people saw this is making money, people call it omnichannel. So we just realized very early on that if you can ask every day for the next 100 years why people who are buying, why people who are not buying, and you're clear about what is the purpose of your company, and you're not building for public market or private market or A investor or B investor, you can keep going. And then market will find new ways to term it. Omnichannel is one of them.
Good point. Yeah, thank you.
Great. So I think let's move on. Next 10 years, Adit, you're the youngest here. You're about 1/3 my age. He is. So what are you seeing? I mean, what's the journey you're seeing? What's the vision you have?
You know, for Zepto, just generally, internet?
Generally, both you and the market. What do you think?
No, I mean, I think, you know, Piyush mentioned something important that, you know, we have to build global companies in India. I think somewhat similar, we have to build truly exceptional internet companies in India that can be benchmarked to the Meituans, the Pinduoduos, the Coupangs, the, you know, the Airbnbs or the Ubers or the Mercado Libres of the world. You know, companies that are generating billions of dollars of free cash flow or close to that, hundreds of millions of dollars of free cash flow, and doing it at significant scale. And, you know, we are still early as an ecosystem. We've not, with few exceptions, and, you know, few companies that are very close to getting there, we've not really gone the full distance yet. And I think over the next decade, that's pretty much what happens, right? If you look at, let's say, the US in the 1990s, it was, you know, first time internet companies were getting created, huge bubble, you know, nobody knew what they were doing, a lot of investing was happening in the wrong companies, lots of, you know, poor execution was happening. 2001, there was a reality check. Most companies died. the next decade, the same founders, the same investors, the same operators learn from the mistakes, build much higher quality companies. Same thing happened in China in 2002, 2008, right? A lot of garbage in that period. 2008, there was a reality check. Next decade, there was a much higher quality crop of companies. If you look at India, candidly, I think we haven't done a phenomenal job. I don't think so over the past 10 years as an ecosystem. I don't think so, right? If you compare it to the US or China or even Latin America or parts of Asia, I think we could build much higher quality companies. It's a function of the same cycle, 2012 to 2021, first cycle of internet. Interest rates were 0%, capital was free. Nobody had seen companies create so much value before in India. Lots of mistaken investing happened. You pointed out to some of the accounting errors. That was just one of the many mistakes that we made as an ecosystem. But then 2022, 2023, we've had a pretty rough reality check that I think, as someone that raised capital in those markets, and I'm sure Piyush has seen this as well, is probably much more of a bloodbath than is even visible outside in. Sure. Unlike in 2001 where it was public. And I think the next decade we build much higher quality companies.
So you think that the next decade we're going to see companies of the size and scale of the American and Chinese internet companies?
Hopefully. I think we've got a shot at doing that. I think companies like Zomato, the companies like Grow, that really have a shot at very large scale outcomes. And now we've started also unlocking TAMs of that size. Like if you look at, for example, quick commerce, right? The TAM that we have is comparable to, let's say, the TAM that DoorDash has in the US.
Oh, I see.
If you compare it, even if you cut, let's say, certain set of cities, certain income demographic, it's actually comparable to food delivery US TAM. And DoorDash does, I believe, if I'm not mistaken, 77 billion of GMV, a few $1 billion of free cash flow, right? And so now there's no market size excuse, there's no capital excuse, there's no talent excuse, it's just execution.
Sure.
And I think it happens in the next 10
But
years.
one of the things is global, right? I mean, for example, you have gone global. So is going global part of it? I mean, you're taking your model to how many countries now?
I mean, we are mostly in Asia, Middle East, and Asia is quite fragmented. So number of countries can be large. So we are there in 15 countries, but yeah, we are largely in this part of the world.
What percentage of your sales is outside India?
About 40.
Wow. So you see that as a growth path for all the, like you may go to, no, you don't see yourself
It's
going.
not about the growth path, Nandan. I think there is so much to do in India, right? The market size is not a problem, but I think people in India, particularly investors, get very worried when companies are going outside India because there have been more failures than successes, to be honest. And that brings to our earlier point about talent. I think we need to, I think in the next 10 years, we will end up, and we do need to change the orbit we are operating in. Because I think from trying to create, we have to create impactful companies, because companies without which the world would not be the same in that sense. I mean, what would the world be without a Microsoft Office? What would the world be without a Google search? And I think today, our view is that, okay, this founder got $1 billion exit, and that's the biggest moment for us. But I think we have to change our equation in terms of, are we creating that kind of impact globally? Second, I think we need to create organizations that can grow and run sustainably for decades to come. I mean, today we have we have an Amazon, which has been there for so long, executing in India in a very, very competitive, solid way, which one would only expect of a founder-run company in India, right? And I think we need to build organizations that can do that and replicate that. And that's not easy, because that requires talent, culture, a machinery that is self-propelling. That is when we'll create organizations of large scale. And third, I think we need to create consumer brands. I still feel that we are so awed by global brands. I think the same needs to happen for Indian brands going globally. We can't be in the same light as people think about, oh, this is an ex-country brand, this is the why. People need to respect. So I think we need to change that journey, and that would happen. That would happen.
Sure. So what do you see? I mean, you're seeing
actually, whatever these guys are doing is absolutely phenomenal. And they are obviously going global in a sort of a limited way. But if you look back, for us to win globally, we should probably already know what those sectors are. And in my opinion, these are things like space tech. These are things like services. So all of these are now going through a new evolution. You know, obviously Elon Musk has done a bunch of things on space tech, and Indian companies actually now know how to compete in that arena. Hopefully some of them become truly global. You know, services is getting into this head-on collision with AI. A lot of innovation is going to happen. And it is fair to say that people in the West don't understand services. So it's probably fair to say that we will be some of the best companies, you know, marrying AI and services together. So at least these two areas I see will be large winners from India, and these could be massive, you know, because services TAM is already 300-400 billion, and if you can, just in India. So I see some massive companies coming in these two sectors. And then, you know, just talking about this whole India ecosystem, you know, our public market, for good or bad, is already 5 trillion. The way it has gone from 3 to 5, it will probably go from 5 to 10 in maybe less than 5 years. And some of these companies which are in the room are today probably 150 billion, you know, market cap, all put together. Even if that grows to, let's say, 4x, 400-500 billion, there is still room for another 400-500 billion worth of, you know, tech startups to participate in that, you know, 2x growth of the capital markets. And I'm hoping, you know, there'll be a lot more 5 and 10 billion companies that will come out of India. And it could be, you know, I think one of the things I liked about both of these guys is, you know, focus on your customer. So that I find in a lot of pitches that I see that it's sort of nebulous. You know, I'm building something and maybe somebody will buy it. As opposed to going outside in, you know, who's my customer? Why should they buy from me? What is their alternative today? And why should I be better at putting that product or service? I heard it clearly from these two guys. So clearly, you know, that's some of the reason that they're successful. But if we continue to be that way analytical about who the customer is and try to get their value proposition out there, in every sphere we'll do well, but I think these two specific ones are going to be really good.
So would it be fair to say that the last 10 years were just a warm-up act and the real action is the next 10 years?
Oh, absolutely. Maybe even the 10 after.
Okay.
I think we will still warm up in the next.
20th year function. But next 10 years, let's talk. So you think that there'll be a scale change in the next 10 years?
Yes, 100%. I think it'll be faster. Because we are just beginning to learn how to run a company right now. We haven't really done innovation and R&D. We are just trying to figure, for us, the game is right now is, and I keep reading LinkedIn, are we red or green? I think we have to get out of that game, are we red or green? That can't be the game, are we profitable, not profitable. The
like
game
how many spectacles do you make in a year?
I mean, right now, 50 million.
Wow. And what will you be doing now? Your next factory?
Yeah, the next factory would be doing about 250 million.
Jeez.
I mean, we have to serve 1 billion people. I mean, that's the goal. The sooner we get to, we can think of the next dream.
So you can service the whole world, no?
We should, the way I look at it, if we didn't exist, the world would not be the same.
Okay.
So we have to do something about it. I mean, there are globally 5 billion people who need glasses. Half of them are without it.
You can service all of them.
Yeah, so that's 2.5 billion people and population is growing. So if we serve 1 billion people, we would have made some impact.
Okay. So you also feel this is just a warm-up last 10 years? Or in fact, you sort of implied that we didn't do a great job in the last 10 years, so now we'll do a great job, so.
Yeah, I mean, like, I think, you know, we have to be intellectually honest with ourselves, right? Like, have we built a Uber or an Airbnb out of India of that scale, billions of dollars of free cash flow, or even like close to $1 billion of free cash flow? Not yet. I think we'll get there. And so I absolutely agree. I think this is warm-up act. You know, we've learned hard-fought lessons. You showed a brilliant chart of, you know, entrepreneurs coming out of companies, learning what went right, what went wrong. In some cases, there are some companies that are now worth more than the parent, right? Which is interesting. So I think it's just day one. Like, we're getting started, but we really, you know, if I were to benchmark the internet ecosystem, it would be like how many $50 billion plus companies are created over the next 10 years. I think we desperately need that. I mean, you know, I've had the unfortunate privilege of having to spend too much time with investors the past 6 months, right? And when you speak to the really serious capital allocators, right? CIO of Fidelity, APAC, for example, or you speak to T. Rowe Price, they're not all in on India. They have some questions because they're saying, you know what, I put 100 million into Nubank, it became a $70 billion company that's doing 2 billion of free cash flow. I've seen that in Latin America. Where is that in India? Right? So we still have to prove ourselves. We're still very much the young, hungry kids on the block that have not yet made it. So
great. Well, we need many more people like you.
I just want to add to that.
Yeah,
I think the last 10 years, we were trying to see, can we become profitable? I think the next 10 years will be, how are we allocating our profits? Allocating that money will become the biggest question mark for companies, because everybody is beginning to make profits now. Everybody, where there was a question mark, can companies make profits? All those question marks are getting answered, and everybody is making profits, and huge amounts of profits are going to flow in. But how do we use that money will be very crucial, I
Great.
feel.
Thank you. And I think the message is the last 10 years was just a warm-up. The real action starts now. And thank you to Subrata, Piyush, and Adit. And I hope you had a good time. Thank you.
Nandan, may I please request you to stay on stage, and thank you for this enlightening conversation. Piyush, Adit, Subrata was fantastic. Nandan, if I could request you to stay back for a picture. It's always insightful to hear from those shaping the future of the startup space. And now, ladies and gentlemen, we're going to move on in a moment to the main event of the evening, the Economic Times Startup Awards. Nandan, you've been instrumental in the selection process, providing your guidance and expertise as the chair of our jury, and we'd be honored to have you present the first set of awards. Our first award tonight is for the Bootstrap Champ. This one goes out to the brave souls who've managed to grow and thrive without the safety net of external funding. Just good old-fashioned grit and hustle. It's never easy to build a business from the ground up, but this year's winner has proven that it's possible to make a big impact with a lean approach. Indeed, this year's winner has made some serious noise in the world of wearables, proving that when it comes to innovation, you don't need deep pockets, just great ideas. Ladies and gentlemen, join me in congratulating Bolt for winning the Bootstrap Champ Award. And collecting this on stage, Varun Gupta, co-founder and CEO. Big round of applause, please, our first awardee tonight. Varun, before you run off, what's your secret playlist for success?
We're too new and young into this journey, and there's so much of established people in the audiences. I'm not the best person, but as a bootstrapped entrepreneur, I think one message that I can drive home is that funding is not the only way. We've seen a lot of discussions around valuations and investments. A lot of startups, the real talent in the country lies in places where there is no access to capital, no access to resources, and that's where you see the real talent. And if you're able to do it, if we could do it, starting from home in a small factory and doing things by ourselves, taking the first CRM call by ourselves on a landline phone, we did a lot by ourselves. And from there, to come a long way to become the second largest player in our category in the country without any access to external capital, then anybody else in the country can do it.
Thank you, Varun. Right, you get the next one. And many of the unicorns here today actually started pretty much from home and in their garages too. Our next award is for the Best On-Campus Award, where the brightest ideas are born in the least likely places, between lectures, late-night pizza runs, and the occasional group study session. This goes to a startup that's taking campus-born brilliance to new heights and solving a massive pain point in the process. The winner has made health insurance claims far less painful, something that seems almost impossible. Ladies and gentlemen, join me in congratulating Claim Buddy for winning the Best On-Campus Award. And to collect this, please welcome co-founder Kate Singh Rajpurohit. So Keith, what made you take on the headache of insurance claims for a living?
Yeah, I think, so I worked with a healthcare startup before my MBA at IIM Bangalore, and we had seen patients, struggling to get their claims, or we have seen them spending additional nights in the hospital to get their claims. So I think we saw it firsthand and attempted it in my second year of MBA. So yeah, that was the thought behind it. Yeah, thank you.
Fantastic. Thank you. Thank you, Keith. A big round of applause, please. Nandan, thank you for helping us present the first set of awards. Your guidance and leadership, yes, please, a big round of applause, have been invaluable in recognizing and celebrating the startup ecosystem. Welcoming the Honorable Minister as he joins us this evening. A big round of applause, please, the Minister of Railways in the room. He's a leader who's been pivotal in driving India's digital and infrastructural transformation. As the Minister of Railways, Information and Broadcasting, Electronics and Information Technology, he's been steering some of the most ambitious projects in the country, shaping policies that have set the stage for India's digital revolution. It is my pleasure to welcome Shri Ashwini Vaishnav for a candid conversation on technology, policy, and the future of innovation in India. Joining him, Srutijit KK, Executive Editor of the Economic Times. Welcome, please. And thank you for being a great audience. Can I have a bigger round of applause?
Who's going to have fun, me or Shruti?
Sir, it's totally you, as always. Thank you, Abha. Good evening, everyone. Ashwini ji, it's such a pleasure to welcome you again in Bangalore. This is the third time you've come to Startup Awards, ET Startup Awards. Thank you so much for this enduring support to this initiative and to the startup ecosystem of Bangalore.
Thank you. Thank you for inviting. I'm just a placeholder today for Piyush ji.
Hardly the case, as we all know. You have been here along with Piyush ji as well, and this year, taking full center stage. But thanks a lot. Okay. I want to get through quite a few questions about. I mean, you're really at the center of so much of action today in, in IT, in semiconductors, of course, in railways as well. Sir, on the digital infrastructure front. We've already made a lot of progress in Aadhaar, with mobile, with Jan Dhan accounts. What is and today, if you see, UPI is is being celebrated around the world, the success of UPI. What is the next phase in this evolution?
I'm sure Nandan would have taken this question in his presentation. Did you? No. So he left something for me to answer. Great. So, guys, it's really an honor to be part of this ET Startup Awards. And SK, thanks for inviting. On the UPI front, we have seen the model, the way the model has been created. This has worked very well. The entire structure, the architecture has worked very well. And as all of you know, the architecture is basically creating one platform using public funds, and then let everybody else hop onto this platform, and then the entire system works very well. So the point that we debated after the success of UPI was, can we create more structures like this? And since each of the items which is required is already available, so how do we create more structures like this? So a couple of experiments that we did, first was in healthcare, second was in agriculture, and third was in digital credit. The entire architecture works very well in all the three different scenarios, which are quite diverse. If you look at all the three different sectors, they are very diverse. And the results are very good. In the health sector, the National Health Mission, they have used exactly the same architecture, and they have used many of the constructs which are already available. Your digital identity is available, the payment system is available, the document verification system is available. So use all these to create a population scale health solution. Recently, Prime Minister approved Digital Agriculture Mission, which is about 3,000 crore investment. And that is going to be a significantly much significantly larger solution because the diversity of the stakeholders is very huge. The seed guys, the fertilizer guys, the insurance people, the people who want to interact with the interact on the market side, the input side, output side, both the sides. The digital lending thing is what really gives me a lot of satisfaction. Large industries, banks would be running after them for giving that $100 million, $200 million loan. Can we create a structure where the big banks and the big lenders, they actually pursue a loan which is less than $10 ticket size? And the solution has emerged, has really encouraged us. Close to $20 billion worth loans have been disbursed by now. And the average ticket size is about 2,000 odd rupees.
This is OCEN?
Not OCEN, this is part of the entire account aggregator framework, part of that. And many startups are working on it. It has taken about almost 2 years to create this kind of structure. And the solution is very good. Now, once it is scaled up, this is going to really revolutionize the entire micro and even nano entrepreneurs, I would like to say.
And this is how we're going to get to a $1 trillion digital economy.
Part of that will be from the existing IT services ramping up, from electronics manufacturing, from having more use cases for our DPI. All these combined will make the $1 trillion digital economy.
Speaking of IT services industry, India's IT services industry, and we are of course in the capital of this very proud story. $250 billion now has been a very massive success. But at the same time, in the realm of products, innovations, it could be argued we have some catching up to do. What would it take for us to move up the value chain? What would it take for a next Google or NVIDIA to emerge out of India?
A lot of work is actually happening around. If you look at, let's say, connect this with chip design, right? Much of the work which was low value work, let's say 20 years ago, people started moving up the value chain. Today, if you ask the guys who are sitting here, who would be in the chip design parts of the entire IT services, from customer evaluation or understanding what the customer requires, to defining what the chip would be, defining the product, and then breaking it down into the subsystems. The entire value chain is today done in India. And that has spawned many startups. For example, in the semiconductor mission, we have approved about 25 odd applications for design of chips and chipsets and SoC. Out of that, 13 have done so well, and 3 of them have actually started attracting venture capital. And some of the chipsets that these applicants are designing, one of them is going to be a totally new architecture for RF in a mobile phone. So those kind of things are also coming. So I would say that the journey is today is a consistent movement up the value chain.
Wonderful. The story of the moment, of course, is the rise of Gen AI. What kind of opportunities do you think the rise of Gen AI gives to India's deep tech and AI startups?
The more I interact with the IT industry, practically everybody is looking at large number of, a variety of applications. People look at applications in healthcare, people look at applications in agriculture, in climate sciences, in drug discovery, in pharmaceuticals, in quality check, in industrial, having a consistent production, large number of in maintenance, in operations, large number of applications are coming when I interact with the IT industry members who meet me. Each one of them is seeing a new opportunity where India becomes the AI application service provider to the world. That is one big takeaway that I've got from interacting with the industry. The second big thing is that a couple of teams which I know are working on a new way of creating a model which, see, the way it is being done right now is a very, it's huge capital that is required. People say it may require of the order of 50, 60 billion US. That kind of order of investment is required, some people say. But there are some people who are now working in a different approach by which the investment required to create a new model can be significantly lesser. So those things are also happening. So I'm seeing a lot of buzz, a lot of activity, a lot of excitement about the way AI can be, the power of AI can be harnessed in improving productivity.
Sir, as India's technology minister, when it comes to AI, you actually sit at a kind of a point of contradiction, because on the one hand there are concerns that AI will eat into a lot of jobs, and India of course needs a lot of jobs, and on the other we cannot wait and let others take the lead in AI either, right? We have to, with the 10,000 crore start AI mission, you have self announced the government's intent on it. But how are you going to balance these twin imperatives of jobs and progress?
Listen, there are two things here. First is our approach in AI mission is basically the approach of democratizing technology. Our Prime Minister has always very clearly mandated that technology has to be accessible to all the startups, to academia, to students, to researchers. It cannot be basically monopolized by a handful. So that's why the entire approach in our AI mission is to make sure that the public investment creates an infrastructure which is then used by multiple number of people. So that is the first part of your question. The second thing is the harms to society. We have two different models before us. One is the US model, second is the European model. I honestly don't think that the way some of the countries have put so much regulation on AI, I don't think that's the right way to go. We
can take that as a signal that India won't be going the EU way when it comes to AI.
I wouldn't like to put it exactly in those words. What I would like to say is that the way we created a structure in our data privacy law and in the telecom law, where we allowed the innovation, the space for innovation to flourish, that space we gave while we made sure that the harms which can come to the society, those harms are fully controlled. That approach is an approach we think we will be able to take in the case of AI also.
When we look at your own trajectory as IT minister now over 2 terms, one of the things you've really been at the center of is electronics manufacturing and indeed semiconductor manufacturing. Can you just take us through what this journey has been like? I mean, when you started talking about and pushing on these things, we were quite nascent, and you really now have the satisfaction of having seen a very big curve. Could you talk us through where the action is now and how the story has panned out?
It's very satisfying. It's very satisfying from multiple angles. First is the quantum of manufacturing which we have in our country today is phenomenal. More than almost $120 billion worth. And the much bigger part of the satisfaction is the kind of talent which is getting developed, the kind of skills which are getting developed. This is phenomenal. I've given this example before, but I would like to repeat it here. One of the factories where I visited, one of the young person who was working, she comes from a village which is about 200 kilometers away from Patna in Bihar. And when I asked her, what do you feel when you are handling this very complex SMT line? She said, when I go back to my village, I get more respect than the village sarpanch or the village pradhan, because when she tells that she is manufacturing mobile phones, people say, oh, mobile phones. And that's a big change. That's a very big change. So that kind of change is happening because of this industry. Today we have laptops coming out of the assembly lines. We have servers shipped out from VVDN factory in Manesar. We have Google Pixel getting manufactured here. Apple, of course, every new model they are manufacturing here. Again, the skill level, I wish I could show that thing which Tata Electronics showed me, where a cube of solid steel is cut in microns, and if you look at it from your naked eye, you won't be able to see whether there was a cut. So that kind of precision, and I asked the gentleman who was running Titan, I asked him whether the precision is higher or lower compared to what you were doing in Titan. He said it is magnitudes higher. So that's the change which is coming, and those skill sets are now getting developed. Now we are very focused on getting all the component ecosystem into our country. We have identified about 8 sub-modules where we can have a large-scale production, and the program is right now in the process of getting finalized. All the stakeholders are being consulted. That will give the next round of, the next wave of manufacturing in our country.
And on semiconductors, what more can you tell us in terms of which facility will start shipping by when and so on?
See, the Micron facility will start shipping early 2025. The first made in India memory chips will be available. And the CG Power facility should also come up very fast. The construction work is going on. Tata's ATMP facility in Assam, construction work is going on very well. Fab, the technology agreement happened between Tata Electronics and Powerchip recently, just a few weeks ago. And what we are seeing is, we are seeing that the ecosystem which is needed, about 200 odd players who have to come in, their entire initial hesitant, the thoughts they had, all got converted into that this is the next big semiconductor destination. India is going to be the next big semiconductor destination. That's something which they feel very comfortable about. We had the recent roundtable with the Prime Minister, Shri Narendra Modi ji, in which practically 3 out of the 40 odd CEOs who were present, they said in the 45 years, 35, 40 years of their career, they have never seen this kind of enthusiasm for any country. So they see, because of the talent, because of the consistency of our policies, because of the clarity of our thought, they see India as a major semiconductor nation in the coming years.
And this momentum on the pivot away from China, which many American manufacturers are seeking, is that momentum still strong? Is it waning? Would you say it's going strong and we're benefiting
That's
from it?
consistent. And I would say the biggest factor is the talent availability. That's a much bigger factor compared to the geopolitics. And that factor is a factor which is consistent driver of growth in our semiconductors. We are also seeing that some of the technologies which we were dependent upon other countries earlier, for example, in the case of packaging, within a short time frame of 1.5 years, the technology got developed by a team of about 80, 90 engineers sitting here in Hyderabad. So that kind of pace is today available. We are seeing some of these companies trying to acquire some of the product companies and get the IP and use the talent which is available here and add the manufacturing capability. So that process is already on.
Ashwini ji, we hear from you about railways quite a bit. We hear occasionally from you also on tech. But on I&B, what can you tell us? I mean, we saw a glimpse of reforms with the announcement of new FM stations, but you've also withdrawn the broadcast bill. Could you give us a glimpse of your thinking in this important sector?
Listen, there is a very huge and a very diverse and a very interesting creators economy which has got developed. Because the way the technology has emerged, today it's possible for somebody sitting in a small village and do videos on the cuisine available in that particular part of the country or the culture of that place and become a global sensation. That creators economy is so powerful. The way that can be harnessed is amazing. That's a huge soft power that we believe that will be India's soft power. So we think in this role in information and broadcasting, there will be a huge focus on developing the creators economy. Second, there will be a huge focus on the input side of media and entertainment, which I would like to put it like this. Today, practically every film has about 40 to 50% of the value is coming out of the technology related aspects. Can we capture large part of that value in India? It's possible. Some of the interactions I've had with the industry, today it's possible to create a significantly large ecosystem where more than 5 lakh new employment opportunities can be created if we look at the technology, the input side of media and entertainment industry. So we are working very closely with the industry. That will be the second big focus. The third big focus will be that some of the traditional industries, like the radio industry, like the broadcasting industry, can we have a light touch regulation? Can we have a more modern set of regulation for them so that these industries which are facing the challenges from emerging technologies, can they stand the ground and can they get an opportunity to transform from the old to the new? These are the 3 major focus items.
Wonderfully summarized, sir. I want to ask a quick one on railways. You are responsible for India's mobility lifeline, the face of which is now changing. So much interest in Vande Bharat, Sleeper and so on. We are sitting with India's startups community. What opportunities are there for India's developers, small technology companies, etc., to partner with railways to facilitate the changes you are seeking to bring?
Multiple opportunities, and in fact some of the solutions which have come from the startups who are already associated with us by now so far are amazing. For example, if you look at a track, the margins, so if the distance between the 2 rails is X, the margin the delta which can be allowed, right? That's a very small plus minus 3 mm. So can we have really accurate ways of measuring it? Can we have advanced predictive maintenance technologies which work on this? For example, some of the applications of AI in a large part of railways, can those bring new opportunities for the startups? One of the startups in Pune gave a solution where AI-based camera is installed in the railway kitchens, and even a small deviation from the standard gets flagged and the person who's cooking gets a call. There are other applications in the way railway reservation can be enhanced. So lots and lots of applications are coming. I would like to invite all the startup entrepreneurs and startup guys, startup champions to participate in this journey. It's a huge opportunity. Our capex last year was 29 billion US. We constructed 5,300 kilometers railway line, new tracks last year. 5,300 kilometers means more than the entire network of Switzerland. Switzerland is 5,000 kilometers, right? So that's the pace at which work is happening today. So we need more and more people to join this journey. In fact, while we are sitting in Bengaluru, I would like to share with the team here the circular railway, which basically has seven spokes in this entire circle. Last time, about a year back when I had come here, we had conceptualized it and we had kind of announced that we are going to work on it. I'm very happy to share with you that the DPR for the circular railway is practically done. By the end of December, the DPR will be finalized. And that will make sure that Bengaluru and all its neighboring cities like Tumkur, like Mysuru, all these cities will basically get very closely integrated with Bengaluru. Instead of people facing the challenges of road, most of the people will be very easily able to come, commute, come, work here and go back to their home and have good dosa at home. The second major thing is the line which connects the railway line which connects the airport to the city. Today I inspected it. Last time also I inspected and had given some instructions to the team. Most of that work which we had planned is done, and now the team will be working to extend the railway station near the airport, and our Minister of State, Mr. Somanna, will be leading that effort to take it right into the airport. If that happens, so today when I traveled, we calculated the time. It's a very cool, comfortable journey of 35 minutes, 40 minutes on the outer limit, and you are right into the heart of the city at Bengaluru Cant. So that's very good project, and hopefully in a few coming months, we should be able to see the light of the day on this. The third big thing was that the stations that we are developing. Today I saw the Bengaluru Cant station. 18,000 square meters of new land getting created over the tracks, right? Phenomenal. The work is going at very fast pace. Globally, the station redevelopment would happen in like decades time frame, right? Decade kind of time frame. And the work which is happening here in Bengaluru is such a high pace of work and good quality work. I was very happy to see the work, both in Yeshwantpur and Bengaluru Cant. Of course, the SMVT terminal was done earlier. And I am again very happy to share with you that the station redevelopment challenge that we took a few years ago, today at this point of time, work is going on 1,137 stations at this point of time. And this is world's largest station redevelopment program anywhere attempted in the world. And the progress is very good. This year about 150 stations will get inaugurated. So get completed and get inaugurated. So it's very satisfying journey. And of course the 4 different types of trains. Now the entire bouquet is done. The Vande Bharat, most of you have seen, experienced, many of you have experienced. That's going on very well. The version 3 is already rolled out. The Namo Bharat Rapid Rail, which is going to connect cities like Tumkuru to Bangalore, Mysuru to Bengaluru. That kind of configuration, cities between like less than 200 kilometers. That train, Namo Bharat Rapid Rail, the first one was inaugurated by Honorable PM few weeks back. We'll run it for about 6, 7, 8 months, and then we'll come out with the series production, the large-scale production of that train. That will be revolutionized. That will revolutionize the railway transport. The third is Amrit Bharat. First one started from Bengaluru to Malda. That train is now run for about 10 months. It's running very well, more than 100% occupancy, and like 1,000+ kilometer journey at a price of 400 rupees. It's phenomenal. It's very successful train. So now we'll start the series production, the large-scale production of Amrit Bharat. So Amrit Bharat, Namo Bharat, Vande Bharat, and Vande Bharat Sleeper. These 4 trains will basically become the mainstay of railway transportation. So last year we had 700 crore people traveling by railways. By 2030, we'll have 1,000 crore people traveling by railways. So that's the target towards which we are working.
Amazing. You've made some announcements about easing that could ease Bangalore traffic tonight. So I think it's safe to say that you're probably the most popular man in Bangalore tonight. Anything that eases Bangalore
I must get some good dosas here.
Yes, indeed.
And idlis also.
Sir, you've worn many hats in your life. You've been a bureaucrat, you've been an entrepreneur, you're now a very high-profile politician as well as a political worker. Tell us, does it ever frustrate you when you're in politics and you have to deal with the rough and tumble of it, you have to face accusations by the opposition, etc. Is it frustrating?
I don't think so it's frustrating. The way I look at this is, every criticism which comes is an opportunity to improve. That's the way I look at it. And each of the work that we are doing touches people's lives. So that satisfaction is so huge and so immense that whatever bricks come is okay, we can take it. And one has to, while being in politics, one has to have a way of being kind of positive in life. And honestly, if you ask me, a lot depends upon your approach towards life. My approach is to be constructive, focus on the work which is in front of us, focus on the challenges. And this is such a great period. We have got the historic third mandate. I think after 60 years, a Prime Minister has got elected for the third time. This is a historic mandate. And people have voted for the work which has been done. People have voted for the progress that has happened. People have voted for the inclusivity of the growth. So this is a great opportunity to work. It doesn't frustrate at all.
That's wonderful. This is a startup event, but everybody is in India. Everyone in India is interested in politics, and I'll end with one question on politics. In the next 6 months, there are about 6 state elections, prominent ones coming up. What's your prediction for how your party will fare in these elections?
Listen, our party, BJP, focuses on the real transformation at the grassroots. I recently worked in Madhya Pradesh, Odisha, these 2 states I worked in recently. If you look at the change which has happened in people's lives at the grassroots level, it's phenomenal. It's so very transformative change. Tap water coming in a village which is 300 kilometers away from the state capital, at least 60 kilometers away from the district headquarters. It's something which people never imagined. It's so transformative. It's such a big change in people's lives. Those changes are real. Those changes are genuine. Those changes are lasting changes. Those changes are this is what our journey is. Right from the days of Jansangh, 1950s, when we started the journey as a political party, our focus was Antyodaya. Antyodaya basically means inclusive growth, which means making sure that the lives of the people at the bottom of the pyramid, that gets transformed. That's what we are focused on, and that's what our political thought is, and that's what we continuously work towards. Even in the first 100 days of Prime Minister Modi ji's third term, 3 crore new houses have been sanctioned for the poor people, both in the urban as well as the rural areas. So that kind of change is what really drives us, and that change is what we are seeking. That performance is what we are taking to the people when we go out and seek vote, and I'm sure people will vote for this kind of performance.
Wonderful. So much work going on, sir. All the best to you in continuing all of this. Thank you so much for being with us here today. Ladies and gentlemen, a big round of applause for Minister Ashwini Vaishnaw.
Thank you, SK.
Thank you, SK, for leading that thought-provoking discussion. Mr. Vaishnav, I request you to stay with us as we present the rest of our awards this evening. Ladies and gentlemen, we're ready to continue with the awards distribution. Next, we have the Social Enterprise Award, which honors startups using innovation to make a real difference in people's lives. Tonight's winner embodies the very essence of the double bottom line, combining profits with public good. Their innovative use of technology has empowered individuals, built self-reliance, and brought government welfare schemes closer to millions of people, ensuring that no one gets left behind. With over 7 million Indians benefiting from their work, the Social Enterprise Award tonight goes to Haq Darshak. Please give them a big round of applause as I invite founder and CEO Aniket Doigar on stage. Welcome, Aniket. So, Aniket, when people realized you were helping them get access to benefits, what did you get in turn? Disbelief or delight?
I think initially, like any urban citizen, there was disbelief because there is a lack of basic information that we saw and discoverability. But I think when we see that citizens, what the government programs are and the the delight is in their face when they know that what are the government schemes that they're eligible for, because an average rural Indian family is eligible for 40 government schemes. And most of them don't know about that. So I think that delight is something that is unparalleled.
Fabulous, Anika. Thank you and many congratulations once again. Innovation is the heartbeat of any successful startup, and this year's top innovator is no exception. The winner tonight is translating cutting-edge neuroscience into real-world applications, bridging the gap between research and impact. Ladies and gentlemen, join me in congratulating BrainSight AI for their groundbreaking work in human brain sciences. Laina Emmanuel and Rimchim Agarwal, many congratulations. Ladies, I know everyone here has lots of questions on how to get smart quick, but tell us, since you know all about science and tech, and why do startup ideas always sound better at 3 in the morning?
Because I think I'm a late night person, and then so many ideas come in the night. Yes.
And also, I guess neuroscience says that if you sit up late night, probably you're getting better ideas. I don't know. So.
Many congratulations. Really wonderful to have you here tonight. Big round of applause, everyone. Our next award is for the Comeback Kid, recognizing a startup that has faced challenges, taken a hit, and emerged even stronger. Tonight's winner pulled off quite the act too after the pandemic, proving that no challenge is too big to overcome. The award tonight goes to Rento Mojo. Let's hear it for Gitansh Bamania, founder and CEO. Gitansh, so what was tougher, dealing with the pandemic or dealing with millennials?
No, pandemic was definitely more tougher. Millennials are the reason why we are here, I think. But I think, all credit goes to our investors and the customers and, all the partners who stayed behind, with us. But, my father was a great inspiration to me. In all my down moments, he's always said that he had a very funny take on the instances. So he's always said that, you've hit the rock bottom, it's only going to go up from here. So I think that funny take stayed with me, and that really helped me. Thank you.
Congratulations, Gitansh. Now to honor a trailblazing woman who's reshaping the landscape for entrepreneurs across India. This year's Woman Ahead Award goes to someone who's not only provided small businesses with the funding that they need to grow, but has also made it her mission to uplift undeserved communities, making entrepreneurship more accessible. Her focus on bridging the credit gap for micro and small enterprises has empowered thousands of business owners, especially women entrepreneurs, to turn their ambition into reality and contribute to the growth of the economy. By combining impact with innovation, she's leading the charge in creating a more inclusive entrepreneurial ecosystem. Please join me in congratulating Hardika Shah, founder and CEO of Kinara Capital, on the Woman Ahead Award. Welcome, Hardika. Hardika, what's been the most rewarding part of the journey in empowering all these entrepreneurs?
It's to do it with a management team that is majority women, and to make sure that not only women entrepreneurs, because financial inclusion in this country cannot be complete unless we bring women along in this journey. So that's what's been most powerful.
No, not yet. Not yet. The next award goes to an investor who seems to have the golden touch, turning early bets into big wins and making a remarkable mark on India's startup landscape. With an impressive portfolio of firms spanning multiple industries, this year's Midas Touch Award The winner has shown an uncanny knack for identifying these startups. Whether it's supportive, disruptive ideas, seasoned founders, his investments have delivered returns and accelerated the ecosystem. Let me welcome on stage the awardee for the next award, Midas Touch, Mukul Arora. Let's welcome him on stage, co-managing partner at Elevation Capital.
Mukul, there's only one question anyone wants to ask you, which is how do you spot them? How do you spot them? What's the secret or the top 2-3 things?
So actually one consistent theme I've seen across a lot of these startups is how customer obsessed those founders are. And actually Piyush mentioned it when he was at the stage, that forget what the market says, forget what the investors say, just listen to your customers. And that's been by far the most consistent theme.
Fantastic. Thank you, Mukul.
Thank you for your patience, Minister. Just one more. The big one, the Startup of the Year. And this award goes to a company that has completely transformed a largely unorganized sector, crafting a business model that's now setting industry standards. With massive revenue growth over the past 2 years and a purpose-driven approach to changing the way people see, they've disrupted the market and created a category all of their own. Ladies and gentlemen, join me in congratulating Lenskart and its co-founders, Piyush Bansal, Ramneek Khurana, Sumit Kapahi, and team for winning the Startup of the Year award at the ET Startup Awards. Big round of applause, please.
Piyush, I really want to let you say a few words or many words, but I know everyone wanted me to ask you what's been tougher, creating a world that sees differently or seeing through all those pitches on Shark Tank?
Oh, definitely changing the world to see differently. I think Shark Tank is something which is easy, right? You don't have to do much, just give money. I think firstly, thanks for the recognition. It's been a long journey. I definitely want to thank, we at the corporate office are where the overheads, but where the rubber meets the road is our 15,000 employees. So this is a good recognition for them. I want to acknowledge Bhanu here, who is one of our early store managers who has grown in the business, and Shanu is the first women worker in our Vision Factory, which is now shipping 50 million. This award really goes to them. I would still say it's day one at Lenskart for us. This is good, this is humbling, and I always say all glory is fleeting in that sense, but thanks for the recognition and inspiring us to keep doing more and being more.
Thank you everyone. And with that final award, a huge thanks to Shri Ashwini Vaishnav for of course being here with us tonight and presenting these prestigious awards. Your unwavering support of India's startup ecosystem is deeply appreciated. Thank you. Thank you, sir. Big round of applause, please. And to bring this incredible evening to a close, and hopefully the minister will stay for some photos. I'm trying my very best. But before we do that, we do have a vote of thanks from someone who's made this all possible. Please welcome the Managing Director and CEO of IDFC First Bank, Mr. V. Vaidyanathan, to share his thoughts with us. Mr. Vaidyanathan. Yes.
Okay, good evening everybody. It's just a wonderful pleasure and privilege to watch this whole program, and thanks very much to to Economic Times for organizing this, and it's a great pleasure for all of us to participate in this. We love startups. We really love startups. We've been encouraging programs around startups for a while now. And everyone loves startup. It's the, let me say, the heartthrob of the nation right now. Government loves startup. You heard Minister Ashwini talk about it right now. RBI loves startups. Ecosystems are getting built. So, and all the accolades all startups won today are a testament of the fact that India is really powering ahead on the huge digital ecosystem India is putting together. And I want to really particularly thank and appreciate on behalf of all of you, and I wish all of you join me in really complimenting Nandan Nilekani, who's a living legend here with us in really developing the public digital infrastructure for the country, on the basis of which many more have come up. And of course, the government of India has played an absolutely stellar role in making it happen. Now, our bank, for all the glamour that is there in the startup world, the fact is also that our initial research, or even I personally met many startups at an early stage, maybe 3-4 years ago. They used to say actually that, for them to even get a credit card was difficult because they had unstable income, even getting a home loan was difficult, even opening a savings account or credit on a current account, so many charges, etc. Let me just share with you that our bank really put together something special. We are sponsors of the program, so we get an opportunity to say that to you, to all the startups here, that we put up something really very special, that, we're the first bank and only bank till date to offer to startups zero balance accounts with zero debit card charges, zero IMPS charges, zero NEFT charges, zero RTGS charges, no cash deposit charges, no cash withdrawal charges, nothing. It's we don't touch the account at all, and we offer doorstep banking to all startups. So really, that's one very big feature we brought for the startup system. Let me tell you, it's just been 3 years or 2.5 years we started this. We already have close to about 20,000 startups out of the 100,000 startups in India banking with IDFC First Bank. And let me tell you, for a bank that's just been around for 5 years, that's really something. Now, the second part, one part is giving offers and all that. But second part is what we're really proud about in IDFC at this point of time is we built a really, really fantastic technology stack. There are many startups whom I'm seeing here, and many of you are working with us, not just banking with us, working with us. And what is particularly important is that not just the applications, the middleware, the channels, and all that. We also put up a really fantastic stack in terms of hyper-personalization, data analytics, data engineering. The whole stack has come together, and I'm really happy to tell you that in just 5 years, our deposits were close to about 38,000 crores 5 years ago. In 5 years, it's 2 lakh crores. 2 lakh crores in 5 years. I don't think, it's just happened in India before. And the new digital ecosystem we talked about has had a huge role to play. Nandan was once in our office just about maybe 2-3 months ago. And actually, we were actually talking to him about the account aggregator and the capabilities that is coming along and the governance around it. We are really big users of the new Indian digital ecosystem. And this kind of a growth is really possible only because of that. We do invite, all of you to work with us and bank with us. In fact, this stack is quite advanced, that all the startups are able to engage with us and convert their ideas into reality. And the stack really despite all the best intentions, a really good technology stack makes it happen. So I just want to share that with you. Lastly, I just want to compliment really all the winners of today's awards, and I think every one of you really deserves it. And the kind of energy and the kind of discussions that happened today that really energized every one of us. The ecosystem, the startup ecosystem is something that we really need to concentrate. I think it's really important. If you see the Silicon Valley and see many of these places, the way the whole ecosystems come around with the colleges, the ecosystem, the bars, the venture capitalists, the whole ecosystem is coming along. I think India, and especially this city, will still need to work upon in terms of the infrastructure and roads and some of these things, because I think they do make a difference in making the lives and and bringing the ecosystem along. So all in all, I think it's really wonderful for all of us to be part of this. I think this is probably 8th or 9th year that our bank has been part of this program, and it is helping us. But more than that, we are more than happy to be helping the ecosystem. So thank you very much, ladies and gentlemen. Yeah, bye.
Thank you, Mr. Vaidyanathan, for your inspiring words and continued support of the ecosystem. And now, before we wrap things up, may I request all of tonight's winners to come on stage with your trophies. We'd love to get a photo of all of you together. I'd like to also invite Sri Ashwini Vaishnav, Nandan Nilekani, and Satyan Gajwani to join the winners on stage for this final moment of celebration. Thank you, everyone. Can I have you all up here, please? And that's a wrap. Congratulations once again to all our winners, and a big thank you to everyone who joined us tonight. We couldn't have done this with the incredible support of our sponsors, our presenting sponsor, IDFC First Bank, Workspace partner, IndiCube, Knowledge partner, Traction, and our education partner, Stanford Seed, as well as our hospitality partner, the Leela Palace, Bengaluru. If you're sharing moments from tonight, don't forget to use the hashtag ET Startup Awards. It's time to relax and enjoy the evening. Cocktails and dinner have been served. Thank you once again, and we look forward to seeing you here next year at the next edition of the Economic Times Startup Awards.